Welcome back to Investing Talk Podcast. Today, we're taking an in-depth look at a company that's really been shaking things up in the digital world, especially across Asia and Latin America. See? And the big question for a lot of you, I know, is this. Is now a good time to buy shares in C? We're going to try and unpack that for you. We've gathered a whole load of information trying to get the full picture. But hey, before we get into all the fascinating details, we'd love to hear from you. If you find this useful, please hit subscribe, like the discussion, maybe leave a comment. It really helps us create more of this analysis. And yeah, you can also consider buying us a coffee if you like what we do. Plus, if there's a company you want us to look into next, just drop it in the comments below. We always check those out. Okay, so we've got info on C's financials, market feeling, future risks, the works. We're essentially synthesizing a detailed evaluation from late July 2025.
That's right. We're going to look at, the core strength of the business, its fundamentals, then how the market's actually pricing it right now, the valuation piece. We'll also check what the charts, the technicals are telling us. And finally, any recent news or buzz that might be moving the needle. It's all about giving you that comprehensive view.
All right, let's start right at the foundation then, the fundamentals. When you look at C's recent reports, what's the headline? What jumps out about revenue and, maybe more critically, profitability?
Well, what's really striking isn't just the sheer size, so that's impressive. We're talking trailing 12 months revenue around $17.93 billion. But the real story, I think, is the net income, $871 million.
Yeah, positive territory.
Exactly. And it signals a big shift because look at 2024 revenue grew almost 29% year over year, which is solid, $13 billion up to nearly $17 billion. But their earnings, they grew by almost 195%.
Wow, okay. 195%. That's significant.
It's huge. It tells you this isn't just growth for growth's sake anymore. They're seeing significant accelerating profitability. Those big investments seem to be really paying off now.
That profit acceleration is definitely eye-catching, especially given their history. Does that strong net income tell us anything about their balance sheet health, like debt levels, cash flow, even if we don't have the exact figures right here?
Yeah, while the latest snapshot doesn't detail every line item on debt and cash flow, that hefty net income is a very positive sign. It strongly suggests improving financial health. And you can infer, a healthier cash flow situation comes with that kind of profit jump. Companies turning profitable like this usually start generating more cash internally. That lets them pay down debt or fund growth without needing as much outside money or just, shore up the balance sheet. And remember, C isn't just one thing. They've got Shopee in e-commerce, C-Money in digital finance, and Garena in gaming.
Right, that diversification.
Exactly. And they're strong in really fast-growing places like Southeast Asia and Latin America, so multiple engines are firing.
So beyond just the numbers, how does that diversification actually give them an edge, a competitive advantage, a moat, as they say?
The moat question. Yeah, it's really interesting with C. They're dominant in Southeast Asia's digital space, partly because of this multi-vertical approach.
Yeah.
It creates real synergies. Think about it, right? Someone plays a Garena game like Free Fire.
Which is massive.
Huge. And within the game, maybe they see offers for Shopee. So they start shopping there. And then paying with C-Money on Shopee is just easy, seamless.
So it pulls you deeper into their world.
Precisely. It's an ecosystem. Each service makes the others stickier, more valuable, drives cross-selling, builds network effects.
Yeah.
The more users on one platform, the better the others become. It makes it really tough for competitors to chip away at their leadership. It's like a flywheel.
Okay, that makes a lot of sense, like an Amazon Prime effect almost. But with strong fundamentals and that flywheel spinning, let's talk about the price tag. Valuation. The first thing that often makes people pause with growth stocks is a high price to earnings, the PE ratio. What's C's PE telling us?
You're right. That's often the first hurdle people see. They're trailing PEs up there, around the 111. And the forward PE, looking ahead, is still about 36. Now, yeah, those look high compared to, say, a mature industrial company.
Definitely looks expensive on paper.
It does. But for high-growth tech digital companies, this is pretty common. It basically signals the market is pricing in a lot of future growth. Investors aren't just valuing C today. They're betting heavily on massive expansion and continued profit acceleration down the line.
So the expectation is baked in.
Very much so. And like many fast-growing companies focused on reinvesting, no dividend yield noted. All the cash goes back into the business.
Okay, so valued for potential. How do the professional analysts see it? Do their price targets back up this growth story, or are they more cautious?
It's a bit of a mixed signal, actually. If you look at the average 12-month analyst target, it's around $147.
But the stock's recently been trading around $158.
Exactly. So the average target implies a slight potential downside in the near term, according to those analysts, maybe suggesting some expect a pause or a bit of consolidation.
Okay.
However, and this is key, you have to look longer term too. Forecasts stretching out further, like to 2035, project potentially significant appreciation, maybe towards $208 or even higher way down the road. So the picture is near-term caution from some analysts, but still strong belief in a long-term value proposition if they keep executing on that growth.
Right, that classic short-term versus long-term view. Now, this is where it gets really interesting for chart watchers and momentum players. The technicals. What's the price action telling us right now?
Yeah, the technicals for C are pretty compelling, but with a little asterisk. The stock's trading near the high end of its 52-week range. That range goes from about $52.05 way up to $172.65.
So, strong upward trend recently.
Definitely. That climb towards the highs is a clear signal of market strength, bullish momentum. Investors are buying. But, and here's the asterisk, when a stock runs up that fast, near the top of its range, it can sometimes mean it's getting a bit stretched, maybe overbought in the short term.
Meaning it could be due for a breather.
Could be. A pause, a slight pullback wouldn't be unusual as some take profits.
Okay, and what about specific indicators? Do they confirm the bull run, or do they hint at that potential pause too?
Well, the specific indicators are generally positive. C gets a strong technical rating, like 9 out of 10, and a setup score of 7 out of 10. Both those generally point towards continued bullish momentum, maybe even breakout potential above that 172 level.
There's always a but, isn't there?
There often is. The but here is the volatility, linked to its beta. C's beta is 1.61.
Okay, explain beta quickly for us.
Sure. Beta measures how much a stock tends to move relative to the overall market. A beta above 1 means it's more volatile. So 1.61 means C tends to be about 60% more volatile than the market average.
So bigger swings, up and down.
It's exactly. Big potential gains, but also bigger potential drops. You have to stomach that volatility. Now, things like moving averages, RSI, MACD, those generally look favorable for the uptrend continuing. But again, given the sharp recent rise and that high beta, a short-term consolidation, just sideways movement for a bit, seems quite possible. It needs to catch its breath.
Got it. Strong but volatile, maybe needing a pause. So bringing sentiment into it, what's the general feeling, the buzz around C in the market now? Any big news recently?
The overall analyst view is quite positive. Among 11 analysts, the consensus is a buy. That's pretty clear. But what's interesting, as we touched on with the price targets, is that the average 12-month target has moderated a bit recently, down to $147 from like $155 or $160 earlier this year.
Why do you think that is? Just catching up to the price or something else?
Could be a bit of both. Maybe some analysts think the easy gains are made, maybe some profit taking is expected, maybe just a touch more caution after the run-up. It's pretty normal. We haven't seen any major insider buying or selling flagged recently, nor any huge company-specific news that would dramatically change things overnight. Generally, though, if you look at social media chatter, broader market sentiment, it still seems pretty positive. Supports the growth story and the technical setup we talked about.
Okay, and looking ahead, what are the potential triggers? What catalyst could really move the stock price up or down?
The absolutely biggest near-term catalyst is their next earnings report. That's scheduled for August 12th, 2025.
Always a big one.
Huge.
Yeah.
The price will react significantly depending on whether they meet, beat, or miss expectations on revenue, and especially now, earnings. A beat could fuel the next leg up. A miss could really hurt, given the valuation. Beyond earnings, keep an eye on the expansion of C-money. Digital finance in their markets is a massive opportunity. Also, Karina, new hit games or continued success of Free Fire are vital for that segment's growth. And for Shopee, improvements in logistics, making delivery faster and cheaper, that strengthens their e-commerce moat. And zooming out, just their general exposure to those fast-growing emerging markets and the whole digital adoption trend that's the long-term tailwind supporting everything.
Makes sense. Lots to watch there. Okay, but no investment is risk-free. What are the key dangers, the potential pitfalls for C that investors really need to keep in mind?
Absolutely crucial to talk about risks. Let's break it down. First, stock-specific risk. That high valuation we keep mentioning, the double-edged sword. If growth disappoints, even slightly, the stock could get hammered because so much expectation is priced in.
High expectations mean high chance of disappointment.
Exactly. Then, sector-specific risks. E-commerce and gaming are hyper-competitive. Shopee faces rivals like Lazada, Tokopedia. Garena faces global gaming giants. They have to constantly innovate just to stay ahead. And regulatory risk is always there in Southeast Asia and Latin America. New rules, taxes, data policies could pop up and impact their business.
Okay, intense competition, regulatory hurdles. What about broader macro risks?
Yeah, macroeconomic risks are definitely relevant. Emerging markets can be volatile, currency swings, political instability. The economic slowdowns in those key regions would hurt C. And again, that high beta, 1.61, means C is sensitive to overall market sentiment. If the whole market sells off, C is likely to fall harder than average.
Great, amplifies market moves.
It does. Finally, liquidity seems fine. Average daily volume is healthy, around 4.3 million shares. But that volatility, driven by the beta, remains a major factor to manage. It's not a smooth ride.
Okay, quite a few risks to balance against the opportunity. So let's try to bring it all together. We've looked at the strong fundamentals, the growth-oriented valuation, the bullish but volatile charts, the positive but cautious sentiment, the catalysts, the risks. What's the overall takeaway for someone considering C right now?
Okay, synthesizing all that, we'd give C an overall score of, say, 7 out of 10. It's clearly a growth stock, no doubt about it. Solid long-term potential driven by those strong digital businesses and really exciting markets. However, and it's a big however, it's currently trading at a high valuation, and the chart shows some signs it might be stretched in the short term.
So good company, maybe pricey stock right now.
That's a fair summary. For a long-term investor, the underlying business is attractive. But maybe think about accumulating shares gradually. Perhaps if the price dips towards that $145 range we mentioned, analysts are eyeing, that offers a better risk-reward entry point than chasing it near $160.
Right, be patient.
Patience could pay off, yeah. For short-term traders, it's moderately attractive if you're good at playing momentum. But that volatility means you have to be disciplined. Very careful risk management is key.
And for those short-term traders needing concrete levels, any thoughts on stop losses or take profit targets based on the technicals?
Yeah, for managing that risk. A stop loss, perhaps around the $135 level, might make sense. That would limit losses if support breaks down.
Yeah.
For taking profits, looking at the recent highs and potential resistance, maybe aiming for the $170 to $175 zone could be reasonable if the momentum continues.
Okay.
But the main point remains. Strong long-term story, but short-term caution is warranted due to the current price and the stock's volatile nature.
What a great breakdown of C. It really highlights that tension, doesn't it? You've got these incredibly strong fundamentals, this exciting long-term vision in dynamic markets, but then you have this current valuation that seems to already price in a lot of that future success. So timing, strategy, they seem absolutely critical here. So as you mull all this over, maybe here's a thought to leave you with. In this digital age, with companies growing so fast, how do you really assess if that growth is sustainable long term, especially when the stock price is already so high? What specific things, what metrics or trends would you look for in C's next earnings report or their future moves to get real confirmation that their ambitious vision is truly playing out and not just market hype, something beyond the headline numbers? Think about that. Thank you so much for joining us for this analysis on Investing Talk podcast. We hope this gave you a clearer picture of C and maybe spark some ideas for your own approach. Until next time.